In this video, I'm going to talk about what is the difference between assets and liabilities. I'm also going to share the difference between them distinctly, but more importantly, how they work together. Get a pen and paper, let's roll. So specifically, I'm going to talk about four things. I'm going to talk about like my number one secret strategy on how to map your way to wealth. I'm going to talk about the leaky bucket syndrome. I'm going to talk about what I call WAPP payment, which is pivotal. And then overall, your P&L, right? Which is your profit and loss statement. So let's begin. So the number one strategy is, believe it or not, a gap analysis. You say, well, what's a gap analysis? It's the gap between where you are and where you want to go. Most people don't have any idea. And women, because I'm a woman, I'm going to pick on you a little bit. I ask you to do this activity over and over and over. And it's amazing to me that women, you say no to financial transactions and you actually don't know where you are. And traditionally, you are actually better off than you think you are. Men, on the other hand, you exaggerate where you are and you're typically a little worse off than when you are. So what I designed in the Millionaire Maker process is a gap analysis, and it is an absolute strategy. We review it with our clients quarterly on a regular basis. It's pivotal. So it's essentially this. Where are you? What's your baseline, I call it? What's your P&L, right? Your profit and loss. Right? Your income and expense, another word for that. What are your assets? What are your liabilities? And yes, I'm getting to the difference between assets and liabilities and how to use it to increase your wealth. But I want to describe the context of it before. So in the gap analysis, I want to know what your baseline is. Like, where are you? Where's your income, your expenses, your assets, your liabilities, and just where are you? Just write that down. Then I have this saying, so what, now what? Right? So what? That's where it is today, because you might be embarrassed or ashamed. You're like, oh my gosh, I should be further along in my life. If you're saying any of those things, that's fine. Let's go to what you want. I call it your freedom day. How much do you want a month? Right? Because I always want to go for that income goal. Then I want to go for the net worth goal. And so inside your gap analysis, where you are and what you want, there's the plan. So the plan comes in two forms in our world. All we're going to focus on is your income and your assets. Is how you're going to make money, how you're going to invest money. Yes, we're going to deal with how you spend money and your liabilities. But see, your whole life you've been conditioned to do it opposite. You've been conditioned to say, oh my gosh, I'm so far in debt. How much can I afford a month? I don't ever want you to say that again. I want you to say, how much can I create every month? Very different conversation when you're becoming a millionaire and are a millionaire. Our whole focus is on income and asset generation. So let's talk again, the differences between assets and liabilities. Knowing now what a gap analysis is, assets are all of the things that you own. Now, legally, in a financial statement, they'll let you put in what I call the stuff, right? Cars, clothing, furniture, like the stuff in your house. Now, really, you're not going to resell that for what you bought it for. And you really can't invest it to make money. So there is a stuff category legally, but that's not what I'm talking about. I want to know, do you have a 401k? Do you have other IRAs? Do you have a Roth? Do you have real estate? Do you have gas and oil wells? Do you have a plane? Do you have other companies? Like, those are assets. What do you own? And then your liabilities are what do you owe against it? Your assets minus liability is your net worth, which is how we track and code you for a millionaire. Now, we're not doing all that work for you. Your bookkeeper is. And again, I put together an extraordinary team and have an amazing tax strategist for you if you really need some help. So assets minus liability is just a thing you want to know and you want to focus on it. So many people live their life based on one financial indicator, your checkbook balance. And I can just tell you, and I'm going to say it harshly, that's what broke people do. Your checkbook balance is just a balance of that day. So say it's on the first of the month or the second of the month, you might have paid a lot of bills, so it might be lower. And then you actually are making more money. So by the 5th, 8th, 9th, 10th, it's actually more money. So why aren't you making decisions based on your revenue projections versus your checkbook balance? All right, so we're going to start changing the way you're thinking into a generative, creative process about money versus what do I owe other people? And oh my gosh, I'm in debt. Those are illegal conversations, meaning we don't have them in our community. So stop right now. So next thing we're going to talk about is what I call leaky bucket. And really it's taxes, right? So leaky bucket has a lot of indicators, but for now, for this video and our conversation today, I'm going to talk about the tax side of it. So again, think of the pattern. You're going to make money. your entrepreneurial venture. You're going to put money to work into your assets, and you may have some mortgages or good debt associated. That's fine. But as you think about that, how are you being taxed? How are your assets being taxed? And if you're not inside a company structure held in a trust, you're going to be overtaxed. And I can promise you, we do a tax return review for our clients, and on average get anywhere between 20, 30, 40,000 back. That's average. For some people who are really high income earners with no tax planning and then actually don't understand real estate depreciation schedules or gas and oil depreciation schedules or aircraft depreciation schedules, you're being overtaxed. Some of our clients have got over 100,000 back. I have a teacher who had a lot of real estate, Northern California, got 72,000 back in taxes, federal and state. Why? Because he had what I call a leaky bucket. Didn't know. It was sort of like you put money away, and you don't realize at the end how much you've overpaid in taxes. So let's get that handled. And then the third, which is really critical, is what I call a wealth, right? WAPP. It's a wealth account payment process, right? So you want to put yourself on a payment plan, right? This is the pay yourself first, which is really important. So as you make money, you want to put it into a wealth account. So we use either money market accounts or iFlip, which is a software that you can put your money in. So at least your money's making money while you're deciding what other assets you want to buy. So unlike a savings account, I don't even like that word. It's just an undefined lump of money. Like, what are you saving for? There's no definition to it. You're just going to save. I know it's a banking term, but think about it. Like, what are you saving for? I would prefer you use the word, what am I investing? So as you make income, you then create investing into new assets, right? So that's the pattern of your money. You want to make money, income, and you want to invest money into assets. That's the pattern that's going to create you a millionaire faster than anything else. So we're going to start atrophying, right? Which is get rid of that whole focus on your debt and your liabilities and what you owe other people, and start putting money away that's for you and your family. I also want you to have a wealth account payment plan and a process to paying your kids and to paying your spouse. All of these things will create a pattern of your money that's going to change your life. It's going to change your assets. It's going to change your liabilities. Now, assets and liabilities, right? Assets are everything that you own. And you want to make sure that those assets are not lazy. So assets that are lazy would be real estate where, especially into this COVID time, where your tenants aren't paying you. And at what point does that not make any sense? And plus some new laws like in the state of California and New York to own commercial property or even some properties in those states because of the new litigation. It's rough. It's really rough. And they are tenant friendly, not landlord friendly. So that asset called real estate, depending on where you are, could be lazy. The other thing that could be lazy is just cash. Just uninvested cash because you haven't got around to investing. I mean, think about what we're trained. We're trained to be, job-oriented people. Go to work, park your money with a financial planner, pray to God it's going to work out. My entire conversation with you is to start taking responsibility for your money. It's your money, it's your legacy, it's what you want to do. So as you generate assets, leverage them properly, which is a liability, but real estate should have mortgages on them. Interest rates are so low right now. As long as your assets are greater than your liabilities, you're gonna hit your millionaire status. So before I get to the last point, which is really how to amplify that P&L side, which is the profit and loss, which is a monthly statement, to amplify the other financial statement, which is your balance sheet, your assets and liabilities, I want you to subscribe. I have so much to inform you about. I have so much to educate you about. My goal is to make you a 3 to 5 year millionaire, which I need you on my videos every day. I'm going to give you a video every day. We're going to subscribe. You're going to work on things, and we're going to be an amazing relationship. So that's our goal. Hit the subscribe button. Please share with other people if you're really enjoying it. Now, the last and biggest point is your P&L, your profit and your loss. So how you spend money is critical. Nobody talks about how to spend money. I can promise you that. But how you spend money can get really mitigated and reduced based on how you leveraged your liabilities. So your liabilities, for example, you can always shift how you pay, when you pay. A lot of people think it's convenient to, as you say, get a payment, whether it's a car payment, student loan payment, credit card payments, house payment, other mortgage, real estate payments, to have an ease of paying everything at one time. Just like you with your credit cards. I don't want your credit cards ever paid off at one time. I don't want your liabilities paid at one time. So the way you spend your money from your liability statement to your expense side of how much you owe per month and what you need to pay per month, I need it staggered throughout the month. Hence, you're going to need a bookkeeper. So I have a document that is an extraordinary document on how to organize all of this, how to organize files, how to organize bookkeeping, how to help you structure your P&Ls and your balance sheets. But I can promise you that piece that I just talked about, how you spend your money, do not pay bills all at one time. Stagger it every week, every week, every week. So you always have money in the system. It keeps your liability column and your credit stronger. So to get my gift, which is a document organization structure, I want you to click on the link below. And here's my final saying: do paperwork or be poor.